This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead. With insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec. Live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Streaming on Bloomberg Originals. We're on TV. We're on radio. We are on YouTube. Yes, indeed. Across Bloomberg platforms. Carol Massar, Tim Stenovec, live here on Bloomberg Businessweek Daily. And we have, a rally underway. Most names in the S&P 500 are higher in today's session. And April, it's my birthday month. This is maybe why stocks are doing so well.
I can't remember if your birthday's today or if it was yesterday.
Yeah, you and my husband, apparently. He's lucky. Actually, he forgot. No.
Okay, well, that's neither here nor there.
We're going to table that for the moment.
We're going to table that. I want to look at oil prices, though, because we are seeing oil still. June contracts for Brent, $113 a barrel. Down from yesterday, 3.6%. But we did see a spike overnight, and that got people concerned about these higher energy prices for longer.
I think it's safe to say at this point, investors are kind of just waiting because it does feel like one step forward, two steps back. 2 steps forward, 1 step back between the United States and Iran. So maybe putting that aside and really, as Tim and I are talking about, the economic growth that we're seeing from data, the AI spend fueling that economic growth, and then we've got all these corporate earnings, big tech that continue to come at us, including, as you said, Apple.
Yeah, Apple after the bell today. The big question, well, do the numbers even matter? Or is the bigger question about the strategy under incoming CEO John Turnus when he takes the helm in September?
Yes, and yes,
okay,
I would say.
There we go.
All right. For us this hour, though, on our radar, the economy, it's important, folks. It always matters, especially ahead of midterms. We do have also a headline on Alphabet. Shares extending their gain to 10%, the most in more than a year. That is part of what we got from the big tech earnings, and there's definitely to the upside. We'll see what we get from Apple. So, that's part of the market story. Back to the economy. We've got the Fed headed for a new era. We are going to talk about the economic and monetary policy footings with our own Michael McKee. He's just back from the U.S. Central Bank, that meeting yesterday.
And a little bit of drama, too, so we'll get that. We'll get that from Mike.
A little bit of laughter.
A little bit of laughter. A read on the consumer, too, a read on housing and more. The CFO of Wayfair, Kate Gulliver, is back with us. We're going to talk earnings with Kate and more.
Yeah, stock under pressure, but great read on the economy, and they've seen a lot of cycles, pandemic, post-pandemic, and where we are today. Hey, and getting ahead of aging, we've got Dr. Fanny Elahi at the Icahn School of Medicine at Mount Sinai. We're going to talk about that, especially when it comes to women and their neurological health. It's important.
I'm looking forward to that conversation and more. First up, though, check of the day's trade and top business stories. Amy Morris is in for Charlie Pellet. Hey, Amy.
After the Google parent reported first quarter results that beat expectations on key metrics. We check markets for you all day long here at Bloomberg. The S&P 500 up 0.9%, NASDAQ up 0.9%, the Dow up more than 1.5%. Definite rally going on there. The 10-year Treasury yield at 4.38% and the 2-year yield at 3.87%. WTI now sliding down toward $103 a barrel. Brent crude topping $113 a barrel. So oil paring back those gains. Applications for U.S. unemployment benefits plunged to the lowest level since 1969. Labor reporting initial claims fell to 189,000 for last week, well below the 212,000 forecast in a Bloomberg survey of economists. Sources tell Bloomberg now investors have placed about $96 billion of orders for Meta's bond sale. The company launched that $25 billion sale of investment-grade notes today. Meta boosting spending on AI infrastructure. Meta shares plunged by the most in 6 months on worries that investment in AI won't pay off. Meta shares now more than 8% lower. And Apple reporting quarterly earnings after the close. Investors looking for clues to incoming CEO John Turnus' strategic plans. We're keeping an eye on all of that for you. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Amy Morris. It's Bloomberg Business Flash. Let's go back to Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec.
All right, Amy, thank you so much. All right, well, U.S. economic growth accelerated at the start of the year, bolstered by a massive AI-driven upswing in business investment. We continue to hear about that, Tim, as those big Mag 7 companies and hyperscalers report.
Well, it does come just after Fed officials left interest rates unchanged. It revealed a deepening division over the outlook for policy, increased uncertainty caused by the conflict in the Middle East. Also at the meeting, Fed Chair Jay Powell said he'll remain a member of the Fed's Board of Governors and will not leave until the Justice Department investigation into the bank is well and truly over with transparency and finality.
Got to say that reveal is something that White House National Economic Council Director Kevin Hassett addressed earlier on Bloomberg Television and Radio.
I'm disappointed in what Jay said, but I'm going to sort of stay out of it as we await just a couple weeks Kevin Warsh's confirmation. I think when Kevin gets in there, it's going to really be a sea change at the Fed that we're all looking forward to.
That, of course, is White House National Economic Council Director Kevin Hassett earlier on Bloomberg Radio and TV. Back from Washington, D.C. in our FOMC coverage is Bloomberg TV and Radio International Economics and Policy Correspondent Michael McKee. He's here in studio. Where to begin? We had a batch of economic news. Let's start with the Fed meeting. Coming off of that, I think it was safe to say when that headline crossed that Chair Powell said, last meeting, but I'm not going anywhere. That's a big deal?
It is a big deal because it's not been done since the late 40s, early 50s. And it is the custom for the Fed chair to resign their governor's seat when their term as chair runs out. But in this case, because the White House has continued to leave open the possibility of criminal activity against Jay Powell, he's going to stay on. So I assume he'll stay on until the completion, at least, of the Inspector General's report. It's possible that he wants to stay on through the midterms and see if the Democrats win the Senate, in which case then the president probably wouldn't be able to get a nominee through to replace him.
Treasury Secretary Scott Bessent on Fox Business late yesterday said that Powell staying on the board is an insult and a violation of norms.
Yeah.
Is it?
People who live in glass houses is basically the answer to that. I mean, Powell didn't say anything bad about the president. Powell didn't say anything bad about Scott Bessent. And he certainly didn't say anything bad about Kevin Warsh. He praised him while he was there. And you think of all the nasty names that the president has called Jay Powell. I think it's a rather ridiculous comment from the Treasury Secretary, but it isn't going to mean anything at all to Jay Powell.
What did we get from Jay Powell and the folks that dissented, the debate that we're having at the Fed? What does that tell you about what Kevin Warsh walks into?
He walks into a box, basically. He can't really move interest rates. He can't come in and make a case for moving interest rates. Remember, the Fed chair doesn't move interest rates. The 12 members who vote do of the Open Market Committee. And now we know that at least 3 of them believe that there is a danger that inflation will go up so fast that they need to raise rates. That probably means there are more who were not voters this time who strongly felt that they may need to raise interest rates. So with the economy where it is, where there's enough strength in the economy to not really worry about a recession at the moment, and inflation is rising significantly, as we saw today at the PCE.
I was going to say, the data we got today.
3.5% for the headline PCE.
Yeah.
So until that all changes, and as Powell and the others said, we don't know when that's going to happen, because we don't know when the war is going to end, and we don't know how fast the energy supplies are going to come back, and all the other stuff that's been stuck in the Gulf of Hormuz when that gets out. So at this point, there isn't much he can do. He can come in and he can say, gee, I'd like to see lower interest rates. I think that the neutral rate is lower than we are right now. And they'll all say, fine, when inflation goes down, we're right with you, Chief.
I think it's look, I don't envy the job that he has, that he will have, because the president wants him to do certain things, and he might not be in a place to do those things.
Yeah, if all things were equal and we weren't in the middle of this war and we had seen PCE inflation come down, it was 2.8% and maybe would have gone a little bit lower. He could have made a case that rising productivity enables us to lower interest rates because the tariff impact that we're seeing in inflation is going to go away. But right now, he doesn't have that ability. So it's going to be a while before we can say it's a Warsh Fed or that he's doing what the president wants. And to do any of the reforms he wants to do, at the Fed. He'll have to build consensus for those, and that'll take a little while. So I would expect this to be for the Fed a relatively drama-free summer, even if Jay Powell is sticking around.
He's going to keep a low profile.
He's just waiting for the Winnebago to be built, right, and hit the road.
I think that's the Supreme Court Justice.
Yes.
Oh, okay. Sorry. Hey, just real quickly, one last question. Good economy, inflation still there, labor market we continue to watch. I just did something with our live Q&A folks about what graduates are facing, and it's not pretty for the entry-level job market. Is there a chance, Mike, that we do have actually higher rates, a job market that is coming undone, and then what does the Fed decide to tackle or help out?
Well, it looks like we're not going to see the job market come undone for one reason, and that is that the economy seems to be doing fine right now, and there's no incentive for companies to lose people. If we get demand destruction from high gasoline prices, and we start to see growth really slow, we've seen consumer growth slow down. We saw it in the GDP numbers today. Then companies start to think about laying people off, but they're not laying anybody off now. 1969 was the last time we had jobless claims this low. I wouldn't put too much on 1 week, but it is a kind of astounding number. So for the moment, the economy seems to be okay, and as long as businesses keep spending enormous amounts of money on AI, the economy probably won't slow down that much.
Jay Powell even talked
insatiable
about
demand in this country for data centers is, I think, what he said.
Or for company announcements about raising money about data centers. That happens every day.
30 seconds. There was a question that a Reuters reporter asked, and it was about Jay Powell keeping a low profile, and then we heard laughter, but we didn't see something on camera, and we were asking you, Jay Powell did what?
Well, that's because I was listening on radio.
Oh, well, I was watching.
Oh, you were watching.
I don't think it got to be on YouTube, right?
Yeah. I don't think it was shown on TV. Because I was watching.
I don't know if it was, because maybe they were looking at Howard Schneider was a Reuters reporter, and basically Jay Powell is standing behind his lectern there, and Howard asked him, how are you going to keep a low profile? And Jay Powell basically was standing there, and he started to go like this. And so everybody laughed. It was Jay Powell unchained. He was being very funny.
Very interesting. Another Fed meeting. All right. Mike, thank you so much. Michael McKee, of course, our Bloomberg TV radio international economics and policy correspondent.
Well, let's now get to markets and the trade today on a day where we're seeing the S&P 500 up 0.9%, the NASDAQ up 0.7%, and the Dow up 1.6%. We are seeing, in terms of what's actually moving under the surface, some companies that are making big moves today, including a company like Alphabet, parent company of Google, up 9.6% today. On the flip side, companies such as NVIDIA dragging down the S&P 500, Carol, down by 4.1%.
Listen, I'm looking at the Mag 7. We reminded you guys all yesterday it was going to be 80 seconds, turned out to be 72 seconds of earnings drop, if you will, which we got after the closing bell, Alphabet, Amazon, Microsoft, and Meta, that would impact probably market sentiment and market momentum. Well, you see the momentum today, but if I look at the Mag 7, only 3 of the 7 names, and that is Alphabet, Tesla, and Apple, which reports after the closing bell, are actually higher in today's session. So something we're keeping a watch on, but it does seem like, once again, investors looking for reasons to buy. Maybe they got it from some of the Mag 7 here.
Yeah, Amazon down slightly, 0.4%. Meta Platforms down 7.8%, off its worst levels of the day. Microsoft down 4.7%, and NVIDIA, the biggest drag on the S&P on a points basis, down by 4.1%.
All right, we do want to get to the markets and the trade as we continue to track, and we'll see how we've got just about an hour and 45 minutes until we wrap up the trade on this Thursday. The stocks, though, as we've been reminding you, in the U.S. headed toward their best month since late 2020. In the final stretch of April, the S&P 500 rising as data showed growth accelerated amid an AI-driven upswing in business investment. We talked about this with Mike, a gauge of small firms whose fortunes are tied to economic activity, really domestic economy, climbed 1.5%. We did see a drop in oil from a 4-year high, helping sentiment, and that lifted bonds as well.
We've got Mary Ann Bartels with us, Chief Investment Strategist at Sanctuary Wealth. The firm has $58 billion in assets on its platform. They provide tech, compliance, investment research, back office services to its 119 partner firms across, well, more than 30 states.
She's here in studio. Good to have you here with us and talk with us again.
I'm so happy to be here in person.
Yeah, it's nice to have you in person. We love having people in studio. I am curious, Mary Ann, you guys see a lot across your platforms. What are you seeing in terms of what's coming in and out? Where is money going? What do investors seem to be interested in? What are you seeing?
Well, the question right now that we get is what's going to happen in Iran, right? In the Middle East and oil prices, and how is that going to impact my portfolio? And what we try to tell investors is to be patient. This is the long run, right? It's more of a marathon than a sprint.
Right.
And when I really look at the market, the secular trends are in place. The market is in a secular bull market. So what do I mean by that? Markets, even if they go into a bear market, will recover and go on to all-time new highs. So the long-term trend still remains up. My long-term target is 10,000 to 13,000 on the S&P.
Wow. By what's the long term though?
2029, 2030.
Okay.
So a couple of years, a few years.
Mm-hmm.
Then when I look at the market, you have to say, what's the leadership within this secular trend? It's technology and tech related.
No doubt about it. Because everybody I feel like it's been year after year after year. It's time to diversify, broaden out. And then the tech come roaring back. The big tech continue to dominate.
That's your leadership. And Carol, when that peaks, the secular market peaks. And then we go into a secular bear market.
So you're saying 29, 30?
29, 30, we should have a peak. But I still think we're going to go into a bubble. Remember how we kept talking about, is it AI?
I feel like you have your technician's hat on.
I do.
So long we talked technicals over the years. I love this.
Now, the fundamentals are there, right?
Yeah.
The fundamentals are supporting it along with the technicals. But as long as tech is leading, you're going to be in a secular bull market. But when it ends, you go into a secular bear market.
How do we know when we're in that bubble?
So that's the hard part, right? When do you peak? And you peak on euphoria. Sir John Templeton had a great way of defining a secular bull market. Markets, basically bottom on pessimism. Nobody believes that markets can come back. They rally on skepticism. They mature on optimism and peak on euphoria. I think we're between this skepticism and optimism. Some days we're optimistic, some days we're pessimistic, which means we still have a long runway. We still have a couple of more years. And I think what will drive this is still tech and AI.
So when you say skepticism and optimism, you're talking about tech. I haven't even heard you talk about
even the market overall, not even just the market.
Just sentiment overall.
Just sentiment overall. I don't think we have pounding bullish sentiment. Just even look at software. We're still trying to debate whether or not software is at a bottom and will software come back. So there's still a lot of skeptics out there.
You have me thinking a lot about what that secular bear market looks like. How long does that last? And I know we're talking like crystal ball here, but since you're looking at the technicals, what are they telling you?
Based on history,
yeah,
all secular trends last 15 to 20 years. So yes, when you go into a secular bear market, it lasts 15 to 20 years. So think about the last.
Well, it was fun while it lasted, Carol.
I hope I'm living on my island far away, and everything's in crypto. Okay. No, I don't know. Yeah.
So what happens though is you get new leadership.
Yeah.
But some of that leadership is already starting to perk up. You know where the new leadership is. The new leadership is coming out of commodities. It's coming out of energy. It's coming out of small cap. And the real big story for me is international markets. Normally when we invest overseas, it's like for a year or two, and then the U.S. outperforms again. I think as we go into the next decade, the leadership in non-U.S. is going to stay. So I'm really a big buyer of non-U.S. equities, and I think we're going to own them for a long time.
Fascinating stuff. You've just piqued a million questions, I think, between Tim and me. Will you come back soon?
I would love to.
Okay, we would love to have you. Great to see you. Mary Ann Bartels, she's Chief Investment Strategist at Sanctuary Wealth. As we said, $58 billion in assets on their platform. Joining us right here in studio. We're going to talk about Wayfair.
Out with earnings. Shares down by 10.6%. The CFO, Kate Gulliver, next.
It's 2:21 on Wall Street. I'm Amy Morris. The S&P hit a record. It's on a path for its best month since 2020. We check markets for you all day long here at Bloomberg. The S&P 500 is now up 0.9%. NASDAQ up 0.8%. The Dow up 1.6%. That's more than 787 points. The 10-year Treasury yield at 4.38% and the 2-year yield at 3.87%. WTI now topping $104 a barrel. Brent crude closing in on $114 a barrel. Alphabet shares jump about 10% after the company reported strong demand for its cloud and AI offerings, with first quarter revenue exceeding analyst expectations. European central bank policymakers are likely to raise interest rates at their next meeting in June unless there are positive developments on energy prices and ending the war in Iran. White House National Economic Council Director Kevin Hassett said that would be a mistake. He says central bankers in the U.S. and Europe should hold off on any tightening in monetary policy because of higher energy costs. He says he's confident the higher prices are temporary. Applications for unemployment benefits in the U.S. plunged to the lowest level since 1969. The Labor Department reports initial claims fell to 189,000 for last week, well below the 212,000 forecast in a Bloomberg survey of economists. Filings have remained subdued despite high-profile companies like Meta and Nike announcing job cuts. That's a signal that the labor market continues to be in a low firing environment. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec.
All right, got it, Amy. Thank you so much. Well, our Bloomberg Intelligence team writing about Wayfair earnings today. The results, they said, may ebb and flow in the near term amid lackluster home spending, but initiatives including rewards, AI, luxury brand, Paragold, and stores are aimed at fueling market share gains. That was part of their assessment.
Well, shares are off their lows of the day, but still down more than 10%. The home goods retailer reported adjusted earnings per share for the first quarter that missed the average analyst estimate. It also issued second quarter guidance on the conference call, expecting mid-single digits percentage growth year over year and gross margins between 29.5% to 30.5%.
Stock down more than 30% year to date. It is great to have back on Bloomberg Businessweek Daily Kate Gulliver. She's the Chief Financial Officer of Wayfair. She joins us once again from Boston. Kate, good to have you here back on Bloomberg. How are you?
Carol, we feel great about the quarter that we printed. I think we're very focused on the fundamentals. And are we doing two things? Are we expanding our share gains in a category that, as your team covered, is complex right now and challenging? And are we expanding our profitability? And we're doing both. So in that, print on Q1, we showed that 7.4% net revenue growth. We think that's on a category that was down sort of low singles, so a really nice share spread to the category. And then you saw really strong flow through to EBITDA. That was our highest Q1 adjusted EBITDA margin since 2021. And so I think you're really seeing the strength of the model there. So we feel great about the quarter.
Kate, I just want to say, first of all, thank you for getting the memo so that we kind of match here. I'm really happy about that.
I love it. Blue is the theme. Cerulean,
I love it. Hey, listen, one of the things I wanted to ask you about, you've been at Wayfair for more than a decade. You're interim CFO since May of 2022, after those heady and exuberant days of the pandemic. Tough time, we know, for the global economy, the U.S. economy, but everyone was buying so much for their homes. And then we had that reset. And I think we've all now can look back at that time and say that was the anomaly. That was the unusual time. We've seen the reset. You've seen your share of cycles, though, I guess is what I want to point out to. Yes. Tell us about the consumers right now. We've been talking about they're in a pinch. Gas prices are higher. Other things are higher. They're holding back. Tell us about what you saw with the consumer.
Yeah, we do think that in our category, the category is challenged and the consumer is, challenged. So if we look at Q1, we felt that Q1, the category was down, sort of low single digits again. This is on a category that has been down, consistently since 2021. And actually, if you look at the trend line, so typically this category in a normalized period grows 3 to 4% a year. If you were to CAGR the 2019, period to now and look at that, what that trend line should have been, we're still far below that trend line. So even when adjusting for that pull forward, as you spoke to in 2020 and 2021, the category is off where normalized should be. And I think that speaks to a consumer who is challenged right now and not spending as much on discretionary. I think what's important, though, is that for us at Wayfair, our focus is less on, when is the consumer going to recover and when are we going to see those category tailwinds? We want those. Those will be fantastic. It's a cyclical category. We know it'll come back. But our own growth is really driven by our share spread to the category and the initiatives that we have going internally around rewards, Wayfair Verified, our physical stores, Perigold, as your team mentioned. And those are growing in a really good direction. And that's what's driving that, mid-single digits revenue guide for Q2.
So you're less concerned about potential weakness from the consumer in the current quarter than you are about that being offset by the tech investments that you're making?
Yeah, so our guide for the current quarter does not contemplate any improvement in the category dynamics. So we're, quite confident in hitting that mid-single digits revenue, absent any category recovery. We said on the call, actually, we thought April was down sort of low to mid-single digits in the category. So the category, maybe further challenge in April. Even with that, we still are confident in this mid-single digits number for Q2.
Hey, talk to us a little bit more, Kate, about Perigold. That's really your luxury online marketplace. What are you seeing the dynamics and metrics of that marketplace in particular?
Yeah, I think there's been a lot of discussion around the K-shaped economy. And certainly where we see that play out is with Perigold, which is, as you pointed out, Carol, our luxury brand. We also have our specialty retail brands, so Joss & Main, Birch Lane, All Modern, and those play a bit above mass, not quite at the luxury level, but above mass. And all of those brands are doing quite well. They're growing very nicely. Now, those are small brands, so Wayfair.com has to be growing nicely too to get that 7.4% comp. But we are seeing strength in the higher end for sure.
What about when it comes to the pro business?
Yeah, that's a great question. Appreciate you asking about that. The B2B business is actually held in quite nicely. Last time we gave a stat on that, I think we said it was around $2 billion. That's an important category for us. One we can continue to grow. That's a place where I'd say our ability to continue to improve the site has sort of nicely added to how the consumer engages in that category. So the pro consumer, for example, wants, consolidated delivery, all of the products arriving together versus piecemeal. They want to be able to plan projects on the site. And these are things that we've rolled out over the last year or so to really help that shopper in that category who tends to be a designer or a contractor.
So, when you're talking about the different aspects of the business, Kate, and I want to go back to, all right, so some weakness now, in terms of what we just saw for the last quarter, but you guys seem to have confidence about momentum for the second quarter. Is that fair?
Yeah, I think what you're hearing from us is, we know the category's under pressure. We've been, as you pointed out, we've been operating in a challenging category for a few years now. And what we're seeing is the benefits of several different initiatives that we've launched over the last year plus, really hitting and combining together. And that is what is sort of driving this share acceleration.
And, one of the things too, Kate, I wanted to dig into, we've talked with you about this. I mean, and everybody talks about, housing, it's not been great, right? People aren't buying homes. But the last time we caught up with you, or I think we've talked about it in the past, about the refresh cycle. Is that where you're really seeing a lot of activity? I know we have been in a house for a long time and we are doing some refresh work overall. But I'm just curious, give us some context and color around that.
Well, I hope you're shopping the sites, Carol, as you're doing the refresh. It is, I will say, with the category down so much, eventually we do think we'll start to see some of that refresh. I think people stay in their home long enough, to your point, and there's a desire to sort of simplify or improve. I think we've talked before about categories that have done well during this period are categories that are more, decorative accents, seasonal decor, the types of things that you might use in a refresh. Whereas the bigger ticket items, the bigger furniture items, that category has been even, that subsegment of the category has been even more compressed. Within all of that, though, our focus continues to be on the share gains in each of those sort of subcategories that we play in.
Can you talk a little bit about the calculus or the equation that goes into when someone returns something or wants something returned? You have this calculation that says, okay, we can give you a partial refund and you can keep the items, or we'll take a full refund, but you have to pay for shipping and back. Because we're talking about stuff that isn't as easy as just returning to a store, sometimes not as easy from a shipping perspective. Just curious how that equation works and sort of how that hits your bottom line.
Yeah, so you've actually introduced a number of the pieces in the way that you frame the question. You're right. We think about one, what is the customer experience here, right? We want the customer to have a great experience. Some of these items are very difficult, for that customer to return. So how do we make that easy for her? We actually have opened up a number of outlet stores across the country where the customer could return the product. We have 2 large format Wayfair stores open now, Chicago and Atlanta. The customer can bring the product into those stores. Or if it's smaller parcel, she can certainly ship that back. But would she perhaps prefer to keep the product and not return? That's always an option. But the focus is really, how do we simplify this for the customer? It's really important for the customer to have a great experience with us, even if she needs to return, because that's what keeps her coming back and shopping consistently with us over time. And I do think it's that trust in the brand and the trust that you're going to have a high quality experience, even if you have an issue with the product, that has really been one of our strengths over the last 2 decades that we've operated. In terms of how that impacts the P&L, our returns rate has remained very steady over many, many, many years. And what we try to do is actually, prevent returns from the start, right? So how do we make the product detail page as rich as possible? How do we help you understand all the dimensions around that product? How do we make sure that the imagery is rich and clear? That's really a place, too, where AI can accelerate. We talked about that a little bit on the call today. AI tools that we're using to improve merchandising, which then, ultimately over time gives the consumer more conviction in the product and less likely to have a return.
Mm-hmm. Okay.
How is the retail stores doing? How are they? You guys it seems like you're very thoughtful in terms of how you expand and build out. What can you share with us about that?
We're thrilled with the performance of the Wayfair store. So the Atlanta store soft opened a few weeks ago, the grand opening, or about a month ago. The grand opening was over a week ago. That store opened, nicely stronger than the Chicago store, which opened 2 years ago. We should expect that, right? We're obviously going to take the learnings from the Chicago store and incorporate that into new store openings. But I think it shows the ongoing, opportunity for folks here to have this omni-channel experience for the consumer. And I think what we're really excited about the store is we see existing customers coming in and shopping us in categories that they may not have typically shopped us for in the past. Mm-hmm. For example, storage and org, kitchen accessories that they see in the store. And it's really helpful to understand the breadth of what we offer. And then we see new customers. What we've said about the Chicago store is that more than 50% of the customers buying in the Chicago store are actually new to the customer file. We have 100 million customer file, right? So to get new customers at this stage is a really exciting thing, and I think shows the benefit of that incremental channel.
All right. Really interesting stuff. Always have a lot more questions, but we know we'll come back to you in the future. Kate, thank you so much. And again, for joining us and here to talk numbers as well as the business and outlook. Really appreciate it. She's Kate Gulliver. She's the Chief Financial Officer of Wayfair. She is joining us from Boston on this Thursday.
Well, I'm keeping an eye on what's happening out of Washington. The president saying on social media that the U.S. is removing some whiskey tariffs after meeting with the U.K. king. Removing some whiskey tariffs, the president says on social media. A wonderful honor.
Maybe the king likes whiskey. Hey, when we come back, we're shifting gears.
It's 2:41 on Wall Street. I'm Amy Morris. We check markets for you all day long here at Bloomberg. The S&P 500 is up 1%. NASDAQ up 0.9%. The Dow now up 1 3/4%. The 10-year Treasury yield at 4.38% and the 2-year yield at 3.88%. NYMEX crude oil now topping $105 a barrel and Brent crude now a little higher than $114 a barrel. Applications for U.S. unemployment benefits plunged to its lowest level since 1969. The Labor Department reports initial claims fell to 189,000 for last week, well below the 212,000 forecast in a Bloomberg survey of economists. A key inflation measure jumped in March as gas prices continue to soar. The latest sign that the Iran war is pushing up the cost of living and delaying any interest rate cuts by the Fed. Compared with a year ago, prices rose 3.5%. That is the biggest increase in almost 3 years, putting the annual rate at 3.2%. Sources tell Bloomberg investors have placed about $96 billion of orders for Meta's bond sale. The company launched the $25 billion sale of investment-grade notes as Meta boosts spending on AI infrastructure. infrastructure. Meta shares dropped by the most in 6 months on worries that the investment in AI won't pay off. Meta shares right now down about 8%. And Apple will report quarterly earnings after the close. Investors looking for clues to incoming CEO John Ternus's strategic plans. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's Bloomberg Business Flash. Now back to Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec.
I just want Siri to work. That's all I want. John, I don't care what else you do. I just want Siri to work. Come on.
Should have told Steve
Great
Jobs
show of
that,
hands.
Tim Cook that,
I know.
now John Ternus.
I know. Come on. We got to get on with this. Hey, I have to say I am a bit obsessed with a recent story. Just ask my team. That was in the New York Times. It wrote a new therapy that has the potential to cure hundreds of diseases and even reverse aging. And the story from the Times, and this is a quote from the article, many scientists now believe that mastering cellular rejuvenation may be the key to transforming how long and how well we live. Some hope that they might eventually be able to harness the process to cure hundreds of diseases, extend life by decades, and even fend off aging entirely. Again, credit to the Times on this. And what they looked into, Tim, it's all about what triggers rejuvenation, and they've done this in the lab, and apparently there's been a series of breakthroughs that have made that future feel tantalizingly close. Again, that's how the Times described it.
We're not there yet, though.
No, we're not.
Lots of groups, though, working on this, including a new women's center at Mount Sinai. So let's get to the Business Week Women's Health segment, where we focus on key issues and developing technologies impacting the present and future of women's health around the world. It's great to have back with us Dr. Fanny Elahi, Associate Professor of Neurology and Neuroscience at the Icahn School of Medicine at Mount Sinai. She joins us once again from New York City. Thanks so much for joining us. I want to talk about rejuvenation, but tell us about this new chapter that you're embarking on right now.
It's a pleasure to be back. The new chapter is basically just formalizing a lot of effort that Mount Sinai and other healthcare systems have put into advancing women's health. I am a neurodegenerative disease specialist. I want to understand the causes, drivers of dementia in order to prevent it. And we've known for a really long time that women are at much higher risk of developing Alzheimer's disease than men. But the root causes of that have not been understood. And so this new center, the Rowan Center for Women's Health, is taking a holistic approach to understanding risk factors in women and aging trajectories.
Hey, Tim and I are looking at each other and I'm like, oh, great, you guys, another win for you all. And he says, well, women live longer. Is that why we are more at risk because we live longer? Are there certain things in terms of our composition, our makeup that make us women more susceptible? And it's not just about that we live longer. Sorry, Tim.
It's really interesting. We are more resilient. We do live longer, but correcting for that extra lifespan does not actually explain the increased risk. No, there are biological risk factors. There are fundamental differences between women's biology and men's biology. And with the new tools at our disposal, we want to tap into understanding those pathways of vulnerability.
What is how do you separate what actually works and what's been tested, what's been proven in a clinical setting with a randomized controlled trial versus people who come to you and say, hey, I saw this is supposed to be to reverse aging, this is supposed to help me neurologically, it's what I've seen, it's what I'm seeing on social media. How do you separate the hype from what works?
You need to do rigorous clinical trials. There's a lot of really exciting science emerging, including from the Icahn School of Medicine. The next chapter is to use the same methodologies that we've used for things like aspirin, drugs for cholesterol, the same rigorous randomized clinical trial design in order to test the anti-aging therapeutics. And we are undertaking a really exciting clinical trial at Mount Sinai that will test combination treatments to slow down the aging process. So this is really the next chapter for extending health span.
Yeah, it's really fascinating. I am kind of obsessed. It's funny, we've done a lot of reporting. I think even in the Times story, they just talk about a lot of wealthy individuals who are obsessed and pouring money into it. I want to go back to something you said about the pathways to vulnerability for women. What are those pathways in particular? And there's so much out there on social media. You have to be very careful. But things where they say, here's how you can maybe fend off dementia or what you should be doing. And I don't know whether it's exercise, keeping the mind busy, just these different things that they talk about.
I'll give a very concrete example based on work that my lab is doing. We are really focused on understanding how blood vessels age. We think is a fundamental component of aging of every organ system, including the brain. And we've uncovered really striking differences between the trajectory of vascular aging in women and men. And one of the really big differences in our lifespan is this middle age, where women undergo menopause. What's surprising to me, and this is the beauty of data-driven studies, is that it's not all hormonal. There's this drastic shift, and the physiology of women really changes. And I can't help but think that biology that shifts is part of the risk for conditions later in life, such as Alzheimer's disease.
So, we go back to, and I can't remember if we've spoken with you about this before, but I know in this segment we often bring it up, especially when it comes to women in menopause, the study when it comes to hormones and how that's been rethought because there were flaws or the outcome maybe wasn't true, and that we're now learning that women should maybe be taking hormones as they're going into menopause or before it. So what's your thinking around that? Now, of course, every case is individual. I understand that in terms of healthcare and treatment, but is that part of something that can help women in this process, especially when it comes to our neurological aging?
Yes, we think that there may be benefit to some individuals being on hormone replacement therapy. The question is for how long and how much of an effect is it going to have on Alzheimer's per se? And I think those studies are ongoing, but our data so far suggests that there may be an effect, but it wouldn't solve the Alzheimer's problem. To put it that way. So just going on hormone replacement therapy in of itself without understanding more of the biology and having other interventions is not going to stop women from having the higher risk of Alzheimer's disease.
Dr. Elahi, we have about a minute left, and I'm just curious for women or men who their wives, their sisters, their daughters, whatever, might be listening, or friends. So what is your advice? What is your advice to women based on what you know and what you're looking into?
I would say that for women, they should have the conversation about hormone replacement therapy because outside of Alzheimer's disease, it can have other benefits and it may also benefit Alzheimer's. I would say exercise, work on sleep, do sleep studies to make sure you don't have sleep apnea, healthy diet, including the Mediterranean diet. All of these are basically as though we're taking drugs. They have real impact on the biology is what we have discovered. So taking lifestyle measures seriously can truly diminish one's risk.
Just very briefly, the hormone replacement therapy, at what age should women start having discussions with their doctor about it?
Right around menopause. I would not wait long because I think what we do know for sure is that if you wait too long post-menopause, you may lose the benefit and only have the risk.
Learning something every week.
I feel like we hear about hormone replacement therapy almost every week.
We do.
Yeah.
We bring it up. Yeah, we talk about it all the time. Dr. Fanny Elahi joining us, Icahn School of Medicine at Mount Sinai, Associate Professor of Neurology and Neuroscience, joining us right here in New York City. Thank you. Look forward already to our next chat with you.
Coming up next, it's Stocks on the Move. This is Bloomberg Businessweek Daily.